Good afternoon, this is Sean Golding with Golding & Golding. Here to discuss a common question we receive, especially around tax season, is whether or not Form 8938 serves as a replacement or a substitute for the FBAR, otherwise known as Fincen Form 114. Short answer is no. Let's go through why. So Form 8938 is an IRS form created in accordance with FATCA, the Foreign Account Tax Compliance Act, and requirements under 6038D, as in David. The form is an IRS form, and it's actually part of your tax return. It's used to report specified foreign assets, foreign accounts, stock certificates, foreign pension, all that kind of good stuff. The form is actually part of the tax return. It's not a separate form. So if you were going to file an extension, for example, you don't have to do a separate extension for the 8938. You do your regular extension for your tax return, and it goes along with that extension. One important aspect of the Form 8938 is it's required for people who have an interest in the account or the asset. So if it's something that maybe you only have signature authority over, maybe like an employee for a business, you may have to report that as signature authority on the FBAR, but typically, unless you have an interest in it, you don't have to file it on the Form 8938. The FBAR, Foreign Bank and Financial Account Reporting, is a little bit different. It's more encompassing in terms of who has to file it. First of all, it's not an IRS form. It's a Fincen form. Fincen is the Financial Crimes Enforcement Network, but don't worry about the term crimes. For FBAR reporting, it's normally non-applicable. So what happens with the FBAR is that it's filed directly on the Fincen website. It's only filed electronically after, I think it was 2013. It's a little different than the 8938. You don't have to have an interest in the account. You can just have signature authority. So maybe your parents threw you on the account in case something happens. Your employer has you as a signatory on certain accounts. It's still required. And unlike the 8938, there's only one threshold if it's more than $10,000 on any given day of the year. So it's not that high of a threshold. Unlike the Form 8938, it's not part of your tax return. It's filed separately, and you have to file it if you're a U.S. person. It means more than just individual. And even if you don't have to file a tax return, you could still have to file the FBAR. So in other words, maybe you fall below the income reporting requirements for a tax return, but you have more than $10,000 in foreign financial accounts abroad, you would still file the FBAR, even if a tax return was not required for that year. So when someone files the 8938, it doesn't serve to replace or as a substitute for the FBAR. And there's some understandable reason for this confusion. First, until before 2013, the FBAR was a TD 90 form, and it was a paper form primarily, and it was included as part of the tax return. In fact, with some software, it might still be in there. But just because the 8938 came out as a paper form as well, it doesn't mean that it is instead of the FBAR. It's supplemental. They're not mutually exclusive one another. Another common reason why people get confused is because a lot of times you're doing what's called duplicative reporting. The same foreign bank account that you reported on the FBAR, the Form 8938, is now required to be filed on the other form. You know, it's kind of nonsensical. If you filed it, you filed it. Why do you have to file it multiple times? Another important thing to keep in mind is that if you don't file the form timely, either the FBAR or the Form 8938, there may be penalties. And here's where you have to kind of disassociate yourself from all the fear-mongering and scaremongering online. Yes, the IRS can penalize you, and yes, they do, but there's various amnesty programs that people can voluntarily disclose and get a reduced penalty or even a penalty waiver. Some of those programs are VDP, the Voluntary Disclosure Program. Even though OVDP ended in September 2018, the traditional voluntary disclosure program has been on the books forever, and they expanded the offshore aspect of it. These days, it's primarily for people who are willful or just can't comfortably certify under penalty of perjury that they're non-willful in prior years under the OVDP program. Even non-willful people did it in order to get a closing letter and avoid an audit unless they proactively opted out. For people who are non-willful, you have the streamlined domestic offshore procedures, streamlined foreign offshore procedures, delinquency procedures, and reasonable cause. We have lots of free information available on our main websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.